Since 2024 has ended, many people have been anticipating the economic performance of Indonesia. Indonesia is one of the fastest growing economies globally, after all. And 2024 wasn't just any year, it was a year of transition. It was the year that saw the change of presidency from Joko Widodo to Prabowo Subianto, marking the end of one of Indonesia's most famous presidents. So, just how did Indonesia's economy perform in 2024? Well, let's discuss this by talking about the most famous indicators often used to understand the economic performance of a country. Let's first start with the economic output of Indonesia, also known as Gross Domestic Product, GDP. GDP is the total value of all goods and services produced within a country over a specific period. In 2024, Indonesia's GDP growth rate showed resilience despite global economic uncertainties. Here's a graph on Indonesia's quarterly GDP growth, year-over-year change, data from Statistics Indonesia. Here you can see that for 2024, Indonesia's economic performance was relatively modest. It was the same as compared to most years, except, of course, from 2020 to 2022, which was the years of the COVID-19 pandemic. But if we take a look at the full-year annual GDP growth, we get to see that 2024's economic performance, which stands at 5.03%, is indeed in line with what Indonesia has been experiencing. So, is this 5% full-year annual GDP growth good? Well, if we compare it to other Southeast Asian economies, we can see that Indonesia's economic growth was in the middle. It was faster than countries like Thailand and Singapore, but lower than the Philippines, Vietnam, and on par with Malaysia. So, Indonesia's economic performance for 2024 wasn't extraordinary, nor was it bad. It was just in line to the overall economic performance of Indonesia. Beyond the economic output, there's also inflation. Inflation had been declining in the overall year, stretching even to January of 2025. Here's a graph on the inflation rate of Indonesia, data from Statistics Indonesia. Here you can see that back in 2023, inflation rate was quite high. And, as the nation entered 2024, it had gone down, with December of 2024 showing an inflation rate of only 1.57%, one of the lowest when we compare it to previous years. Several reports indicate that this is because of the government's measures, such as significant discounts on electricity tariffs and reduced airfares, which helped dampen consumer price increases. On top of overall inflation, the subsector, food, beverages and tobacco group, saw lower inflation, sometimes even negative. Here's the graph for that matter, data from the same source. Here you can see that an important sector for Indonesia has seen a lower inflation rate, which means that prices for essential goods like food, beverages, and tobacco have become more stable or even decreased at times. This is good news for consumers as it helps maintain their purchasing power, especially for low and middle-income households. Lower inflation in this sector also suggests that supply chains are functioning well, and government policies may be effectively controlling price volatility. Overall, this contributes to easing the burden of living costs despite the broader inflationary pressures in the economy. Another indicator is consumer spending. Consumer spending is a key driver of economic growth as it reflects the confidence and purchasing power of people. When consumer spending is high, it means people are buying more goods and services, which helps businesses grow and creates jobs. On the other hand, if spending drops, it can signal economic uncertainty or financial stress among consumers. Here's the graph of Indonesia's consumer spending by quarter. Here you can see that consumer spending had increased throughout 2024, ending the year with the highest ever on record. This strong rise, however, as some have argued, is because of the recent election, which was buoyed by election-related expenditures, wage increases for millions of civil servants, and a series of government incentives designed to bolster purchasing power. Here, you can see that from the fourth quarter of 2023 to the second quarter of 2024, it saw a huge increase in consumer spending in just 2 quarters. This is in part due to the government's pre-election spending. Beyond consumer spending, there's also employment. Employment is a critical part in understanding how well an economy performs in a year because it reflects the health of the job market and the ability of businesses to create jobs. High employment means more people have income to spend, which boosts economic growth. On the other hand, rising unemployment can signal economic struggles, with businesses cutting back and people having less money to spend. Stable job growth is often seen as a sign of a strong and resilient economy. Here's the unemployment rate of Indonesia. Here you can see that the unemployment rate of Indonesia has actually been going down. The first quarter of 2024 even saw much better unemployment rates when we compare it to previous years. Again, this was the same month when the election was held in Indonesia, which shows just how well pre-election have impacted the country. Finally, one last indicator to understand before we talk about what the government did for 2024 is the sectoral performance and their contribution to the GDP. There are 3 major sectors in Indonesia that contribute significantly to the overall economy. The very first is agriculture. Here's a graph on the growth rates of the agriculture, forestry, and fishing industry. Here you can see that while the overall economic growth of Indonesia was over 5%, the agriculture industry, on the other hand, didn't actually see the same economic growth rate. In fact, in the first quarter of 2024, it even contracted by 3.5%. This is typically normal for developing economies because as countries develop, the focus shifts from agriculture to more industrial and service-based sectors. This transition often leads to slower growth in agriculture compared to other sectors. Here's the graph on the manufacturing of Indonesia. Here, you can see that while agriculture was very slow, manufacturing was in line with the overall economic growth of Indonesia. But this figure is still below the overall economic growth of Indonesia of 5%, right? The same is for mining and quarrying, which saw an annual growth rate for 2024 of just 4.9%. Although for the first quarter of 2024, mining and quarrying had seen significant growth. What actually stood out for 2024 is none other than the service sector. The service sector is broad. It encompasses a wide range of industries, including finance, retail, tourism, transportation, and information technology. One example is business activities, which, as you can see in the graph, saw a stunning annual growth rate of over 8.38%, which is much more than manufacturing. Information and communication industry also saw high growth of over 7.57%, and accommodation and food service activities, which posted over 8.5%. Now, let's move on and talk about the government's role in the year 2024. There were 2 major ways that the government influenced the economy of Indonesia in 2024. One is monetary policy, and the other is fiscal policy. Let's first talk about monetary policy. In 2024, under the Bank Indonesia, BI, the nation's central bank, the interest rate of Indonesia was very high. Here's a graph on that matter. Here you can see that Indonesia's interest rate for much of the 2024 year was over 6.25%. It was lowered to 6% in the latter months of 2024. But if we compare this rate to previous years, it was indeed high. The reason why this is problematic is that high interest rates make borrowing more expensive for both businesses and consumers. This can slow down investments, reduce consumer spending, and ultimately dampen economic growth. But despite high interest rates, Indonesia's economic performance was still stable, reflecting the resilience of its economy. That is also why, as we saw earlier, the inflation rate of Indonesia had gone down. It's as we mentioned earlier, because of some government measures, but a key part of this inflation rate going down is because of the high interest rates. As we go into 2025, however, the central bank's governor, known as Peri Warjio, has indicated in some ways that they are going to lower the interest rates. This was aimed at supporting the rupiah amid global financial market uncertainties. Moreover, the Bank Indonesia is also quite evolving from a pro-stability stance to a more balanced outlook that sought to encourage growth while mitigating currency risks. This is because the inflation rate has already stabilized and is within the target range, reducing the need for such high interest rates. On the fiscal side, which is done by the state government, it is basically where they spend their money, whether that be education, infrastructure, or anything that the government is involved in. Here's a graph on some of the budget priorities for 2024 compared to 2023. Here you can see that government spending for the year is just continuing the usual spendings. Education would go up as usual, as well as social protection. But one priority that actually fell was infrastructure, as you can see here. Spending from 2023 to 2024 went down. The spending for the new capital city is also listed, which is a pretty hefty price. 40.6 trillion rupiah spent for just the year 2024, which is a third of the spendings made into food security. Take in mind that this spending is just for a capital city, whilst food security is done for the entire population of Indonesia. So, was 2024 a year of economic growth? Well, indeed. It was a year of continued economic growth. But anyway, do let us know what you think. Thanks for watching.